Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, July 27th, 2018. Wanted to wait till the markets open to do a quick overview of some of the things I'm watching, and we'll touch on very briefly hit on the broad markets, crude oil, natural gas, Bitcoin, some major asset classes or securities that I've been covering lately, as well as a broad market. So this is ES, starting out here with the ES, the S&P 500 E-mini futures. Sticking with the 60-minute time frame right now because we don't really have any new significant developments on the daily time frame right now. So we're just watching things wedge higher. Nothing new to report. Nothing to see here so far. GDP was announced today, and it was a non-event. It was a snoozer. The market didn't have any reaction. Came in just a hair below expectations. Here's a little minor trend line I watched, but we still need to break this trend line. So that's the story on ES. Nothing new to report. It just continues to wedge higher. Let me find my NQ. One second. Here it is, NQ, NASDAQ 100 E-minis, much closer to trend line support here. You can see this is the trend line I'm watching, and this is more significant in my opinion. When the NQ breaks, I think the ES will follow. In other words, when the NASDAQ 100 breaks, I think the S&P 500 will follow. So the good news is we still have Apple coming up for earnings, but most of the FANG stocks have reported now, and so that gets that out of the way, and the market will now find its direction over the next few days here. So a little less risk as far as opening gaps, at least if you're trading the Nasdaq 100 QQQ tech sector. So that's what we're looking at, and we're right on that line. That line can go any day now. It can break today, it can break next week. As I said, just from the looks of these, is it possible to wedge higher? We can. We can wedge higher without taking out the divergences, but this trend line is getting pretty long in the tooth for a 60-minute chart. But unless we break it, we don't have any sell signals on the Nasdaq 100. But I do believe it's imminent. I think it's going to crack probably by next week. Be great to see it crack by the end of the day today to keep the longs a little nervous heading into the close, but we'll see. Let's take it one day at a time. I know Facebook got a little pop here in pre-market, and it's following through right now. So, if the dip buyers finally move on Facebook today, that's going to give a little bit of a boost to the Nasdaq 100. And for you QQQ traders, this is what the Qs look like. Same story again, not much to report. Yesterday's update, I mentioned this 180-ish level right here is support. We have, quite a few reactions when you zoom in more recently. Breakout right here. Well, this was resistance at 180-ish level. We broke out right here, back tested, came back tested again all day yesterday, and we're moving off it right now. But again, it's early. Market just opened, so we'll see how the day ends. And then on SPY. Similar story. We have this little small rising wedge pattern, and this is actually a little more clear. I didn't have it drawn like this on the ES, and that's why I like to look at both. Sometimes I pick up on something that I might not see on one or the other. So there it is. So look for a break. It's a pretty well-defined trend line too. You could probably even sharpen that trend line, hone in on a little bit on a 5 or 15-minute chart. But there it is. So watch for a break of that. I mentioned earlier in the week, ExxonMobil and Chevron Texaco were due out to report today, and so far not so good. ExxonMobil down 3%. Remember, this is the largest energy stock in the world, the largest component of the energy sector, XLE, and together XOM and CVX at Chevron, they make up half of the returns of XLE. Most traders probably aren't aware of that. So when you're trading XLE, you're really not that diversified. The returns are going to depend largely on just two companies. So you want to chart these at the very least. Of course, you have a little more diversity. The other 50% of the stocks are, you know, going to counteract that. But remember, birds of a feather flock together. If the leaders of the sector are going down, you'll probably see everything else going down. And if nothing else, it's forced selling. So when XOM has their woes, on this earnings miss or disappointment on the guidance, whatever brought it down since they reported, we're broken down. You can see this trend line right here. There's your breakdown. There is support below, so I can tell you this right now. I wouldn't short it right here, at least not yet, because that 79.90 is a pretty decent support level. You can see all the reactions When we go back here, we had reactions from above, a lot of reactions back here. So that's a pretty significant support level, but I wouldn't go long either. These negative divergences at the recent high tell me there might be more. So, maybe look at something like this. Maybe move down here, flirt with that level for a little bit, and probably eventually go on to break it, especially when crude oil, which I'll get to in a second here, when that chart plays out, or if it plays out as expected. There's Chevron Texaco. We had this sort of symmetrical triangle pattern right here, breakdown, back test heading into earnings last night, and so far rejection you can see there. So there's another stock, the second largest energy stock in a bearish technical posture right now. So not looking good for the energy sector, and as one would imagine, there's XLE down as well. All right, let's look at, well, that segues into crude oil. So here's CL. This is my has been and remains my bounce target zone, all the way this little boxed area here, and we're right in the middle. I have three resistance levels. Again, this would be my uppermost, and that would be 70.43, and right now we're at that 69. What is that? 69.65 level. I probably need to increase the text size there. It's pretty hard to see, probably even harder on the videos, but there it is. So that's so far where crude is stalling out recently, and that level comes from some reactions along the way here. So, and what you probably want to do here at this point is we can add a trend line underneath and watch that trend line and also break the bottom of the zone. So like I said, at best, if I'm correct, I see just a little more upside. So the risk reward in crude is not favorable right now on the long side. You can see we're diverging. These indicators are lagging as prices move higher. That'd be your divergence line. So there it is. So next breakdown in crude, we should give additional headwinds for those energy stocks that I just talked about there. So my outlook on crude remains near term and intermediate term bearish. We just need crude to roll over here and end this little counter trend bounce that began with the divergent low right here, which was recently pointed out. So we had a long trade op there on crude, and of course that last big rally ended with a big divergent high. And so that's it. Just wash, rinse, repeat. Look for these divergences and then wait for the sell signals and jump in on the next trend. Bitcoin recently pointed out after the breakout, 7,000 level breakout, and then the additional resistance at 7,200 was taken out. That sparked that nice rally, but as pointed out recently, we had some negative divergences building and a pretty well-defined uptrend line, which broke, was that yesterday, last night, and it continues to play out. And right now, it looks like a little flagging action, so I think there's a little more downside to come in Bitcoin. There's your what we call bear flag. A bear flag is a continuation pattern. So what you have is a flagpoles and a pulsive move leading down to it. Then you move in a sideways to upwards consolidation area. And the measured target, you take the distance of the flagpole, add it to the highest part of the flag, and that would give you your target. So this is what I'm looking at on Bitcoin. If you're trading that, or what is it? GBTC is a quasi ETF. It's similar to an ETF way to trade it if you don't trade futures. These are the futures, symbol GXBT. And so there, I'm looking for a pullback to about 7,500, followed by a resumption of the uptrend. And, that will carry over into those proxy trades we talked about. Overstock hasn't kind of lagging. There's something going on there, but it, had that initial pop, and then Riot, of course, went up when it was going up. Riot had that little bearish, bullish pennant there, and went on, hit that second target of mine, and has pulled back in line with Bitcoin. Obviously, this one trades nearly in lockstep with Bitcoin, so it's just a proxy, especially if you don't trade futures. But it moves. In fact, it tends to move even more than Bitcoin in percentage terms when it moves. So same story. If you're looking to, take this one or Overstock or any other, proxy trade on Bitcoin, watch that support level I talked about a minute ago, pull back. You can see when you zoom in here, there's a little gap right here about 673, 670, and that would roughly align with that pullback in Bitcoin I'm looking at. So there's an area you might want to recycle back into Riot, or take a long position with a stop somewhat below, maybe extend this trend line out, although there's not a lot of reactions there. Forget about that trend line. I wouldn't put too much stock in that. Gold. Gold's hanging in there. It's certainly not taken off yet. Let's click that alert away. But here's that 60-minute chart. We still had the divergent low. The divergent low I pointed out the other day when we added GDX. Was it? Yeah, GDX is an official long trade based on the divergent low in gold as well as what I'm seeing in GDX, at or near support. And so far that's playing out. It's just not very impulsive. So we had a breakout. This isn't a super well-defined trend line, but it is a downtrend line nonetheless. It has at least three reactions. That's what I look for to validate a trend line. The initial reaction here, reaction two, and then reaction here. We gapped above it, back testing. And there's also support here. It's not solid support, but it's decent support right here. You can see that's contained all but this little brief pop down below, all the pullbacks there around 115.75. So, you know, the success or failure of GDX will hinge largely on what gold does. Um, this one's challenging the stop. It has not closed it below 21.35 yet. I think we were a few pennies above it yesterday. And, if GDX doesn't reverse today and closes here or lower, it'll be out and we'll let it go. And that's fine. We can always get back in. I know a lot of, this market's been plagued with a lot of stop raids. And that's why I'm on some of these swing trades now, even if they're based off the 60-minute charts like this one and that SQQ trade recently. I'm using a stop on a daily close. Sometimes they'll get you, like they did with SQQ the other day, but stops are paramount to success in trading. You got to use them. Sometimes they're going to get you. And like I say, if the charts still confirm, you can always jump back in. But the key to successful trading and investing is cut your losers, let your winners run. And so if they take GDX from us, so be it. But I still like the trade. And now, would I add right now? If you guys have whoever if you're watching this video and you didn't take it the other day, no, I wouldn't, because we're already below that stop level. I would wait to see us recover. Right now this is sort of we were back testing and now we're a little bit below that line. Anything can happen, but again, let's just ideally you want to see this one pop back above there if you want to build a case for a rally up to any of these potential price targets. And that's that. So let's see what happens with GDX today. And finally, for those gold members or free trialers in the trading room, I've highlighted natural gas recently. We had this descending price channel right here, these two trend lines, these downtrend lines. So nat gas was working its way down, had a little false break there, but actually ran into resistance. Yeah, you call it a false breakout, but I updated again. The divergences remained intact. That's why I didn't abandon this one. And we put in a divergent low here. And I think, as I pointed out the other day, we finally went on up here and took that level out with conviction. That was an impulsive and sustained breakout. And once again, we already hit that level once. That level should clarify here. I'm referring to it's about $2.78 or so right there. And you can see we hit it. When we zoom in, we had a reaction again because that was a resistance level as it was support back here. And now we've taken it out. That's bullish. That opens up the door for a continued move up here to my next target or any of these targets above. As of now, this, I think I probably said it before, 2,864. That would be my preferred swing target, and that's where probably time to get out. And, book some profits because there's pretty significant resistance when you go back here. A lot of reactions from above and reactions from below. So that would be my final swing target on this one. It's an unofficial trade. Nat gas, once in a while I'll add one of the tracking ETNs, but they do a pretty lousy job. They do okay in the near term, but you can't really hold them very long. They just suffer a lot of decay. Of all the commodity ETNs, are probably the worst at tracking the spot price of their underlying. In other words, natural gas futures is what the ETNs invest in. Over time, they just do not do a good job. So you have to get in and out. My preference and what I'm long right now are nat gas futures. It's a more pure play. All right, let's wrap it up here. I'm going to do a video today on the automakers. I think there's some opportunities setting up there, so that'll come out in a little bit. I'll share some unofficial trade ideas and maybe make a few of those official trade ideas depending on what happens. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.